We're taking a look at portfolio positioning again as we head into reporting season with the market firmly fixed on guidance from companies. What comes out could be the make or break for this recent rally. For more, Robert Talevski from Activist Investment Advisors joins us live via Skype in Melbourne. Good morning to you. Talk to us about this market, because it certainly feels as if the ASX is priced to perfection. Do you think so?
It's an interesting time, Nadine. I think we're sort of obviously, given that we're 30% up in this recent rally from the March lows, and we're only a couple of percent sort of just below our recent peak. So it's a really interesting time. Obviously, we're about to enter the sort of earnings confession season, where a lot of Australian corporates will be reporting on their earnings, and I think the market will obviously look for signs of whether, obviously the current environment in the rally and for support, I suppose, from that point of view, that, and that obviously may either support, make or break the current rally around equity markets. PE valuations are quite elevated. Obviously, at the moment they're around sort of hovering around 18 times PE, which is, reasonably higher than the average of 14 times. And in the US, it's probably more pronounced, where PE forward valuations are around 22 times. So obviously that's not a great sign for equities, in the sense that they may look overvalued. But who's to say that equity markets won't continue to rally? At the moment, if you look at the current environment and where equity markets sit on that scale, we're sort of seeing a lot of euphoria, a lot of boom sort of feeling around the equity market, pretty much the same as what we saw in February, just before we saw that major low. But at the same time, it's just one of those things that at the moment there's a lot of momentum driving equity markets, and that may continue.
Robert, when it comes to the upcoming earnings season, what are you expecting? Obviously, we haven't had a lot of clarity in terms of what companies have been up to over this period due to blackouts.
Yeah, look, I guess obviously some sectors, will do better than others. Obviously the FANGs and the healthcare sectors have continued to do well in the US. So, obviously there's a little bit less, obviously, pressure on them. But, more importantly, the miners here in Australia, there'll be a lot more attention. And obviously banks as well is another sort of key sector. And, they've been quite volatile recently. So, again, the market will look for guidance as to see, where they are sort of in terms of their earnings, and, how much of an impact the current, obviously environment has on both current and, going forward, where they may be going in terms of earnings.
Hey, Robert, I noticed, and I know one night doesn't mean much, but, the Russell 2000, the small cap space in the US, outperformed the S&P 500 and the NASDAQ 100, and small caps have been performing relatively well there. Are you comfortable investing money in the small caps at this stage in the cycle?
Yeah, it's a really tough one. I mean, we have a long-term allocation to small caps. So, we obviously support the sector. We think there's definitely, larger returns to be gained from the small cap sector, but at the right time as well. So, as much as, we've missed some of that rally in that small cap sector, there's still a little bit of risk around, how the current sort of smaller companies will respond to the environment. And I think, in our view, I think larger caps will probably still, we're positioned to larger caps, in a sort of overweight position. But look, I think from a diversification perspective, it still makes sense to have an allocation to small caps over the long term.
Robert, there's been quite a bit of debate about who's actually leading this rally. People are talking about Robinhood traders and the like, lots of retail investors getting in on the act, actually forcing institutional investors to go and drag them off the sidelines. Are you buying that argument?
It's a really fascinating thing. So we've seen, I guess, what we call the retail investor sort of coming to the market, use some of their sort of fiscal funds, I suppose, if you can call it that, to invest in the market, and that's just had a massive impact on driving up equity market and valuations, and as a result, that's been a key part of pushing the rally upwards. Look, I think at the end of the day, it's one of those things. There's an opportunity there. There's a strong force. I mean, it's been hard to find indicators of this particular fact, but I mean, one of the key indicators has been in the US with the options market that, the percentage of smaller investors has exploded in terms of just, in that sense. So I think there's definitely a big sort of momentum play coming out. And I think a lot of the institutional investors, there's probably been a bit of FOMO, fear of missing out, or sort of a bit of BMO, bears missing out. We're sort of finding a lot more sort of bears becoming a lot more vocal, trying to sort of shoot down the current rally. But look, there's a lot still, I guess, in terms of support for the equity markets. Obviously, we've heard US Federal Jerome Powell come out and talk about keeping interest rates lower for longer. So that's a very good thing for equity markets going forward. We are starting to see some of the larger institutional investors, that is, invest back in the market. That's another good thing for equities, in my view, as well. And and that's the other thing. So I think there's a combination of factors there that should continue to, I guess, support the rally going forward.
Yeah, it's such an interesting sort of change in narrative, even over the past couple of days since we saw that massive sell-off on Wall Street on Thursday. Many people were talking about, a return to the bottoms. Was it a potential? It seems as if that's firmly in the rear-view mirror. When it comes to, I suppose, risks that you see being posed to this rally, if the economic data continues to improve around the globe, is it really coming down to the headlines that come around COVID reinfections or second waves? I mean, where is the biggest risk to this rally that you see, Robert?
I mean, valuations is one of those things that, it's probably another way of looking at it, that, we saw, heightened valuations in January, and then obviously the markets continued to rally. I mean, obviously the risks are of another outbreak, but then again, we've seen some of that recently, in China, and, in some of the data coming out obviously here in Australia. So that hasn't really done, that had a massive difference. And I think, to be honest with you, I very much doubt that, the government's going to, close down everything like we have had, in terms of the closures recently. So, I think, again, the risks are around, obviously the presidential election coming up is probably going to be a big key risk. Biden's looking more like now, in recent times, the ultimate sort of presidential candidate. So, obviously, I think markets are probably a little bit more comfortable with, I guess, the devil that in Trump. But at the same time, that could bring a bit of uncertainty, as is traditional in this sort of, around this time, around US elections. I think Trump's going to probably increase the rhetoric around with China. So there'll be a little bit more of that, negative probably news to come out in terms of headlines. And, there's always a sort of a strong chance that, Trump might also try to create some sort of uncertainty with another country, or even. So I think that's sort of another thing, or even, I mean, we've always seen this sort of rhetoric, around this time of that sort of time frame around the presidential election. So that could be another risk as well.
Plenty to keep investors on their toes in the weeks and months ahead. Robert Talevski, thank you so much for joining us here on Ausbiz, and we'll speak again soon.
Thank you.
Thanks, Robert. All right, just a very quick programming note for you. Make sure you join us